Hi, this is Jeff Peterson with Commercial Partners Exchange Company, and I want to give you some tips as you get ready for tax preparation and the deadline for the filing of your federal income tax return. If you just completed a 1031 exchange and you need to report it, you may need to assemble some information to allow your CPA or your tax accounting tax preparer to have the proper information so they can give it to the IRS as part of your federal tax return. Now, what they need is to fill out a Form 8824, which is like a worksheet that helps the IRS connect the dots between the properties that were sold and the properties that were received as part of your exchange. And they ask for a lot of information. Your accountant or tax preparer will need some information from your closing documents to help them fill out these forms. So let's talk about some of the information that you could assemble and provide to them to make this as fast and efficient as possible. The first thing is, if you used a qualified intermediary, you may have received a closeout letter or summary letter that gives all of the critical dates on which things happened and how your exchange funds were utilized in that process. So that'd be very helpful for your accountant to have. In addition to that, as to the relinquished property that was sold, you can provide your accountant with a PDF copy of the final signed settlement statement or closing statement that summarizes how the monies were spent and the transactional expenses that were paid, the dates that things occurred on, and the dates that were used for dispersing funds. So that's a very helpful document. In addition, the deed or conveyance document that was used to convey the ownership of the property to the purchaser, that's a very helpful document for your accountant to have to know how the property was transferred and on what date it was conveyed. Now, the closing agent or person that was responsible for conducting the closing, which may have been a title company, an escrow officer, a law firm, they have to send in a 1099-S, an electronic return to the IRS, reporting the transferor and the amount of gross proceeds or cash that was received by the transferor. If you received a 1099-S, this is a great time for you to pony it up and provide it to your accountant, because your accountant will want that information. It also substantiates the closing date and how much money you purportedly received as part of that sale closing. Now, once you sold your relinquished property, you may have identified your replacement property within the 45-day identification period. And if you did, you want to provide a copy of that signed and properly filled out identification form and provide that to your accountant, together with proof that it was timely sent to the qualified intermediary or other proper recipient, which would be a party to the transaction. And perhaps you even have an acknowledgement that that party received it timely within that 45-day period. Now, finally, when you closed on the replacement property from your seller of the replacement property, you probably had a closing statement that shows your funds coming in, the purchase price, the closing date, what expenses and transactional costs were incurred. So that would be a great thing to provide to your accountant as well. Now, all of your documents with your intermediary, your exchange agreement, the various assignments of the relinquished property and replacement property agreements, the identification, the correspondence that you receive from your intermediary, all of that would be very helpful to give to the accountant as well, because it backs up that you properly administered the exchange. And lastly, sometimes mistakes happen during closings, and they have to correct it. Maybe they miscalculated the tax proration. Maybe they forgot to pay a commission to a real estate agent. Maybe they underestimated or overestimated the amount due to a lender to pay off a mortgage or a deed of trust. If you should receive a corrected document or a refund after closing, that is really important to give to your accountant, because otherwise they may be working off of bad information, and you need to give them the updated, corrected information so they can get it right on your tax return.